Everyone, welcome to my first video and to my channel Beyond the Ticker. I really created this channel to focus on fundamental analysis of companies in an effort to better inform people about their investment decisions. Seems like today everybody's trading based on Reddit hype and whatever the hot ticker of the day is on social media. And I think a lot of people are getting burned by that. And I think we need to move back to fundamental analysis, really understanding what the company is, what they do, who they are, and really understanding their performance so you can make um, better decisions, particularly if your focus is on long term investing. So, first video here, we are going to focus on Nike. It's an easy one because everybody sort of knows Nike and what they do, but let's jump right into it. Okay, so first up, we've got um, Nike's mission statement. So you can see here, I don't know if it's more valuable to write it in large font, but here it is. Mission statement is to bring inspiration and innovation to every athlete in the world. Asterisk here says if you have a body, you are an athlete. Now, this doesn't really narrow down their target audience. Their audience is literally every single person in the world. Now, where they get their niche is, the products that they sell are really focused on athletes, athletic products, and things like that. But very large potential audience and customers for their products. All right, so now if we go into and look at the website here, we see company. Let's click on company and find out a little bit more about them. So who we are. These are the brands, the primary brands that Nike operates currently. So obviously Nike, Jordan, and Converse. And then going in here a little bit deeper, we've got some of the leadership. I think most people have heard of Phil Knight. He is the chairman emeritus. Currently, Mark Parker is the executive chairman. John Donahoe as the president and CEO. And so let's drill down here into John Donahoe. And it gives a little bit of a background on him. And this is important because the people who run the company and make the decisions has obviously a big bearing on the success and what the company does. And so we definitely like to look and see what his history is and what some of his successes were. So he was the president and CEO of ServiceNow and eBay, continues to serve as the chairman of board at PayPal. So he has a vast experience of being an executive and leading companies, which is obviously good to see. Won't spend too much time here. Obviously, if you were going to invest, you could dig in deeper to other leaders' experience. I would say most importantly, you want the president, the CEO, and the CFO because they have the most influence on potential stock prices and company performance. So this is Matthew Friend, who's the CFO for Nike. Next, I wanted to just take a minute and look at the industry for the sports apparel market. And according to this site, which is Fortune Business Insights, you can kind of see where they anticipate the market going. Obviously, the market for sports apparel during the pandemic years, 2021, 2020 to 2021, and then continues to grow. And they're anticipating continued growth um, in the industry. So that's obviously a good sign when it comes to the long-term potential of the stock. So, okay, so here are the companies that Nike competes against. Obviously, ones that you've heard of, we've got Adidas, Puma, Lululemon, Under Armour, Columbia Sportswear, Asics, and et cetera. So there's um, the industry for sports apparel is highly competitive, also something to keep in mind. And then if you want to get into it, there's other industry developments and news from the industry that you can look at, and I encourage you to do so before you invest. Okay, and next, and perhaps most importantly, is to look at some of their most recent earnings reports. And so one thing that I always like to look at is the 10K. Now, the 10K is an SEC required report, and that is filed annually. If you want to look at the quarterly reports, which are the 10Q, Those are also available. The 10K has a little bit more detail than the 10Q. So especially when we're at the beginning of the year here, currently right now in February. So we're going to look at the 10K um, and see what that has to say. So a couple of things about the 10K, right? It has some of the information that we looked up elsewhere. So it describes their business, how they make their money, some of the history. 1967 they were incorporated, and goes into, hey, look, their business is they're going to sell athletic footwear, apparel, equipment, accessories, etc. So you can get into that, their products, what they sell, sales and marketing, um, and everything, the number of their stores. But really, I want to go down and look at um, risk factors. So risk factors are a required part of the 10K, um, and sometimes there is. So this has some of the executive information that we previously looked at. You can go here to find it all in one place if you want to, but let's find those risk factors. All right. So these are risk factors. Like I said, they are required, and a lot of times they're written in such a way that is not helpful. Basically, everything is a risk to the company, but often you can find things to um, help inform you of what if things went wrong, what could go wrong for Nike. It does say here that they face intense competition. That's what we saw on that other page. There's a lot of competitors, and so if the popularity of their brands or their products wane, they could hurt. Um, Economic factors could influence what happens with company performance and the stock price. Um, they rely on some partners, so maybe something will happen to their partners that will hurt them. Climate change, legal and regulatory stuff, extreme weather. Let's see if there's anything else. Um, Failure to maintain reputation. Obviously, brand is extremely important in this industry, and so if they do anything that impacts their brand, and so you kind of get the idea. There's a lot of pages of this, but it's worth going through, especially before you make any long-term investments of any sizable amount of money. You want to check this out to see what could go wrong and what's on their mind as to what they think could go wrong. So it's an important resource. All right, and obviously another thing that this has in it is financial information. Okay, so this is a good view on their consolidated view of their income statement across all their segments, all the markets, and you can kind of see what they did. So revenue is growing year over year from 46.7 to 51.2 billion, which is pretty strong growth. And then you look at the net income. So net income was down year over year, and so you can kind of see, and it kind of breaks everything out here, so you can understand where that's coming from. Obviously, some increase in other expenses here, um, as well as operating overhead expense. It's a lot of increase in expenses that maybe drove that lower net income, even though there was pretty good growth when it comes to the revenue side. Um, And then let's look at the balance sheet. So the balance sheet, there's a couple of important things to look at here. Obviously, the cash they have on hand compared to their current assets, which is cash and other things, compared to the current liabilities, which includes some of their short-term debt and payables and things like that. So total current liabilities is sitting at 9.2, and current assets is at 25, which is a pretty strong ratio. Call that a current ratio from current assets to current liabilities. Yeah, so you look at long-term debt. So long-term debt is only 8.9 billion. Um, so not a crazy amount of debt here. You'll see companies with a lot more debt than that, and that is what that looks like. You can kind of look at cash flows, see how much cash they've got coming in and going out, um, and kind of where they sit at the end of the year. Cash is extremely important when it comes to the success of the company because that's how they pay their bills, pay their employees, and everything else. So it's good to see um, a strong cash flow. Down a little bit from year to year, um, but pretty good cash flow here. You can see that the 10K is vitally important to look at when you're thinking about investing. Talks about a lot of things, those risk factors, financial statements, some of those ratios. And then, real quick, let's talk valuation. The last thing that we wanted to talk about here is that is valuation. And one of the key valuation um, ratios that I think to look at is the price to earnings. So currently right now, so this site here shows the price to earnings. This site is csimarket.com, but currently the price to earnings on Nike is 29.7. And you can see some of its competitors like look at Columbia Sportswear is at 16.8. Um, Guess is at 8, Levi's at 13, Lululemon is very high at 58. So one thing that you can take away from the price per earnings is really the value that you're getting from a company's stock, right? So you would look at uh, Guess and maybe Under Armour here at 8 as well, and conclude maybe they are undervalued. Maybe you could look at Lululemon at 58 and say maybe they're overvalued. Nike, they're at 30, somewhat high, but also you have to account for potential future growth, which this does not account for. So just a good comparison in the industry for valuation purposes. And then I guess lastly, you want to look at and find your entry if you've decided to invest. And so you look at the down below here, we've got the 52-week stock chart. You can see that it's down um, year over year from looks like about 128 down to 102 today. Um, but there's a couple of things that you got to think about. So one is that they do pay a dividend. And so you get right now at $1.48 per share or 1.45%. So you may look at that stock chart and think it could be a good entry point, um, but you make your own conclusions. But definitely look and see. I would look at the last year to find where you think a good entry would be. This is where potentially technical analysis could come in. And then down here on the right, you've got some of the market cap numbers, the price per earnings, which um, just the timing difference. This one says 28.52, and really understand a little bit more about the size of the stock. You see the market cap, which is the um, stock price times the um, market cap or the number of shares outstanding, and that's how you get kind of the total value of its stock, which is 155.1 billion. And this is the kind of fundamental analysis on Nike. I hope that you enjoyed it, got something out of it. If you did, if you would consider sharing, liking, leaving a comment. If there's any company that you guys want me to run through, provide some analysis on, please leave it in the comments. Happy to do that. And I will see you next time.